Welcome to our Axios Pro Media Deals virtual event. I'm Tim Baysinger, Media Deals reporter for Axios Pro. And I want to welcome our audiences on Facebook, YouTube, Twitter, LinkedIn, and on Axios.com. Join the conversation today on Twitter with @AxiosPro and the hashtag AxiosPro. Over the next 30 minutes, I will be joined by my colleague, Sara Fischer, and we'll forecast 2023's media trends and take a look at the year's biggest media deal-making stories so far. It's only been 1 month, but it's already been a really busy year. Now joining me from New York City is Axios senior media reporter, Sara Fischer. Sara, really great having you here.
Hey, good to see you, Tim.
So yeah, let's just dive right into it. I think one of the biggest companies that's, being for sold that's on the tip of everyone's tongue right now is the WWE. Vince McMahon returning. They're looking for a buyer. At the same time, they're going to be, renegotiating their media rights deals. I'll just start it off. Who makes most sense as a buyer, and why is it someone that isn't named Comcast?
That's such a good question. I mean, WWE is a hot franchise right now for a few reasons, namely because they don't rely fully on ads. As you know, they make a lot of money from subscriptions. They make a lot of money from licensing. And so as a result, this is not a company that's being impacted by the huge macroeconomic advertising slowdown. Who it would be a good fit for? Well, obviously the big streamers are looking to fill their streaming services with content, and they have a ton of cash. So think about the Netflixes and the Apples of the world. They're also starting to get into sports in addition to entertainment. I know WWE sort of falls in between, regardless of how you see it. And then you have some other players. So you mentioned Comcast. WWE has a current deal with them for streaming. And so they would be a natural buyer. Obviously, the Peacock deal, is a very lucrative thing for them. That's a 5-year deal. And to your point, that expires in the near future. Then you have the other networks. Disney has a streaming service. Fox doesn't have a standalone subscription streaming service, but they have a lot of interest in sports. They have ad supported. And so there's a bunch of different players out there. The Saudi Arabia Public Fund, there were some interesting reports that maybe they could be interested in WWE. But, my gut says that the WWE would be more interested in selling to a U.S. domestic tech or streaming behemoth rather than a fund like that.
Yeah, no, what makes it the only way I could see someone like a Saudi Arabia making sense is of any of the buyers, they would probably be the one that would be most likely to just let Vince stay in charge, run it however he sees fit, takes it private, and they just kind of get out of his way.
Yeah. And, there's Endeavor as well. Nick Khan, who's, currently leading the WWE, longtime agency guy. They've got a stake in UFC. And so that's another player that could come in. But I think to your point, Tim, Vince McMahon coming in after being ousted for, sexual misconduct allegation payments were $20 million nearly is a big deal. And the person that I think, or the entity that he would want to buy this company would be, to your point, someone that would empower him to stay and run it the way he wants to run it.
Well, it's interesting, and this is the last thing I'll get on WWE before we can move on. But yeah, with Vince coming back, I mean, it's interesting because when he left, I remember writing for our newsletter that, that made a sale look more likely because of Nick Khan, who, as soon as he came over as president, that was the initial thought by most people. It's like, oh, are they priming them for a sale? But Vince is the majority shareholder. It was like, well, no sale happens without his blessing. So if they're going to sell it, he may as well run the process. At the same time, he now has so much baggage with him that, does his involvement hurt the process?
It could. I think most people see WWE as such a hot asset that they're willing to look past some of the Vince McMahon issues. The other thing is that he has sort of pushed out what could have been an issue. I mean, his daughter, Stephanie McMahon, left on her own accord, but sources have told Axios that working with her dad day to day and this new capacity with him returning would have been untenable. And that's part of the reason that she left. Well, now that she's no longer there, maybe it makes his leadership a little bit more, digestible to some of the folks that would be coming in. And perhaps maybe he comes in and sells it, and then he negotiates a leadership structure that he's comfortable with. Who knows? But it'll be a hot one to watch for sure.
A storyline worthy of their own Raw and SmackDown shows.
Absolutely.
And yeah, the next thing, obviously, the other, big media story that so far, and we are now exactly 1 month into 2023 with saving February 1st, is the drama between Disney and Nelson Peltz and his activist campaign. He really wants a board seat. He, this goes way back to when, Chapek was still CEO. Obviously, Peltz, he says he doesn't want to replace Bob Iger. It's very clear he's not a fan, especially with the Fox deal. He's really not a fan of that one. Anybody who watched the CNBC interview a few weeks ago. But, I guess the main thing is just, and I don't know the answer. I don't know if anybody knows the answer, but what happens here? What is the end kind of result here?
Such a good question, because Bob Iger has 2 years on the clock. And so it's not like we're dealing with something that is going to run out in perpetuity. Whoever wants to come in and make changes at Disney, these activist investors, remember, it's not just Nelson Peltz. Third Point and Dan Loeb was putting pressure on them last year. They need to do it in sort of a timely fashion, because the company will be announcing, obviously, new leadership within the next few years, and that might have changes to the board. I think that the Nelson Peltz Disney standoff is going to come to an end when Disney figures out what happens with Hulu. One of the things that Nelson Peltz has been advocating for is that Disney has to buy Hulu, or else, he said to CNBC a few weeks ago, then they should just otherwise get out of the streaming game. And so I think once we see movement on that deal, then perhaps it'll inspire Nelson Peltz to back off, to renegotiate with them privately, et cetera. But as you know, Tim, that's not the only thing he wants. He's sort of angling for a board seat. He's criticized management. He's criticized the board. And so I think for now, it sort of stays in a stasis until we figure out Hulu. But if it doesn't go the way that he wants, or if it doesn't happen fast enough, perhaps he puts more public pressure on Iger and Disney's board.
No, yeah, and the Hulu question. I mean, I know how much we've talked about it over the past year. Is one of the most intriguing questions that in the streaming world right now, because it was such a unique deal that they signed 3 years ago, well, now 4 years ago, in that, starting sometime next year, either Comcast can force Disney to buy out their remaining 33% stake, or Disney can force Comcast to sell them their remaining 33% stake. So it's interesting when Nelson says, well, they got to buy out Hulu or else they should get out of streaming, because, well, that's kind of how the deal was structured, is that starting next year, either side can force the other's hand. So at some point, it's going to be figured out. What's interesting is that, especially with Iger coming back, I know one question we had immediately was, okay, well, does this change the calculus with Hulu? Disney has been bleeding money on the streaming, business. Comcast, even though they're now trying to really roll out Peacock bigger, they just dropped the free part of their streaming option. But I'm pretty sure if you went to Brian Roberts and talked to him off the record, he would tell you he would love nothing more than to just have Hulu for themselves. So my question is, why doesn't Disney just say, you know what? Why don't we just sell it to you, get a huge cash infusion and just really focus all in on Disney Plus?
I think that cash infusion makes sense, but strategically, there's a lot they could do if they got Hulu holistically. And I think that's why people like Nelson Peltz are really pressuring them. For example, if they fully owned Hulu, could they, sort of guard all of their content on Hulu, not take their competitors' content and make it sort of, difficult, rewrite the bundle, if you will? There's a lot of different things that they could do. But one of the things that's interesting about Nelson Peltz is that his activist stake to him represents a broader trend in the media industry, with activist investors coming in and pushing for changes. Oftentimes, they're pushing for changes that are already being made. If you think about Value Act pushing the New York Times to bundle their subscriptions, the New York Times is doing that anyway. If you think about what Irenic was pressuring News Corp to do, which is spin out its real estate arm, looks like News Corp is going to be doing that. And so the activist investor trend is just getting bigger and bigger as these deals continue to get more complicated heading into 2023.
Well, it's interesting because, Nelson said it about, why do this? He goes, well, since we've been involved, look what's happened. They brought back Iger, they pushed out Chapek. We're already having a great impact. So it's interesting because by pushing for things that they're already doing, they could then just kind of claim a win as saying, hey, look what we, look at our impact. Look how great we are.
Yeah. So a lot of that, I think, has nothing to do with them, but okay.
Exactly. Exactly. It's interesting on the Hulu question, because I was talking to a source a few weeks ago, and it was someone who threw out a hypothetical, here's what Disney should do. And it related to Hulu, which was, this person has the idea that everybody should have a fast streaming service. Everybody should be doing some sort of free streaming service. That's the new broadcast TV, basically. And the idea was Disney, if and when they buy out Hulu, should turn it into their FAST service. They should make it free and just reap the ad dollars. And because part of the argument also was that Netflix and Disney Plus putting ads on their premium plans was a bad idea, that you're just going to anger customers who love not having ads. So that was it's just an interesting thing I heard, and I'd be curious to hear your thoughts.
I think this is going to continue to be a big theme in deal making. The free ad-supported streaming trend is not going to go away. And if you take a look in the past few years, a lot of these big entertainment companies have invested in those types of free ad-supported services. Right now, they have the big services. What they need is ad tech and programming to make them stronger. So you look at Paramount, which has acquired Pluto TV via its acquisition or combination with Viacom. You look at Fox, which acquired Tubi. Comcast acquired Sumo. So the next thing is strengthening those assets with smaller acquisitions. That's the thing I'm looking out for.
Mm-hmm. Oh yeah, and one thing that I definitely wanted to bring up, and it's obviously not related to Disney. Well, it is related to Disney if you think of their Fox deal, because it was part of that. But for any sports fan, especially if you're a baseball fan, there's an interesting thing happening with the regional sports networks, particularly Diamond Sports, who is in a real bad spot right now. They're pretty much everyone assumes they're going to declare bankruptcy soon. But it's interesting because that part of the issue is that they owe payments, especially on these media rights deals, to some, I think it's like 19 of the Major League Baseball teams who are getting ready to start their 2023 season. And these teams rely on these media on these media dollars, especially from the local media. These are usually long deals, and they might not be making those payments. If you read a Bloomberg report earlier this week. And so it's interesting because this is a business that I've talked to people who, have admittedly they have stuff to gain if this business fails, but there's a real possibility that the RSN business not just fades away or gets smaller, that it completely collapses.
I think that's a real possibility. We're going to figure out when some of these renegotiations happen at the end of the year with Diamond for carriage agreements, and that'll set the tone for what distributors are willing to pay for regional sports networks. And it could be, to your point, nothing, and that a bunch of them sort of start to get dropped. But at the same time, Tim, you brought up a really important point, which is that the local teams rely on the regional networks to carry the sports and to get visibility. And so some local team owners are looking at this dynamic and they're saying, well, we can't really afford for our regional sports network, the people who carry our broadcast to our local supporters, to go under. So why don't we just buy it or invest in it? And that's what you saw Monumental do in Washington, D.C. They bought out the rest of their stake in NBC Sports in Washington. Look, I don't think that the regional sports network business is a long-term thing. Like all of linear television, it's facing, terminal decline as people move to cord cutting. But what I do think is going to happen is that if you take a look at the way sports is consumed, people consume it regionally. I can't foresee a fan paying a different streaming service for the NBA, for the NFL, for the NHL, and for the MLB. If you're in one jurisdiction, if you're in Philly, you just want one service that's going to give you all of your sports. And so I think that the model of the RSN will continue to live on in the streaming and digital world. But what exactly it looks like, it's pretty unclear right now.
Mm-hmm. Well, one thing I think that's really interesting that's, I don't know if it will happen, but it's interesting that they're trying to make it happen, is that local broadcast TV, like you have Scripps, you have Gray TV, I think is doing it. They're now trying to buy sports rights, take advantage of the RSN problems, and bring their local sports rights back to like local over-the-air TV, which is an insane thing to say in 2023, that it's actually broadcast TV that could be the beneficiary. I mean, I talked to, the guy running Scripps' new sports division, and he, in no uncertain terms, is really looking forward to what happens with Diamond Sports and thinks it's an opportunity for them. So it'd be really interesting to see what happens.
It's fascinating, Tim. And to your point about just sort of local broadcast, one trend that came out of the pandemic, and this really impacted deal making, was that when people transitioned to streaming, especially paid streaming services, they didn't want to pay for cable additionally. but they still wanted live sports and live news. They still wanted the stuff that you get on traditional television. So what did they do? They went out and they bought bunny ears. And for free, they could put those bunny ears on their TV sets and pick up broadcast channels, not cable, but free over-the-air broadcast networks. And I think a lot of folks, Scripps in particular, saw that as a huge opportunity. That's why they spent billions of dollars acquiring ION, which was an over-the-air broadcast company. And I think that trend is going to continue as people continue to feel overwhelmed by the amount that they're paying for streaming and all of these services writ large.
Mm-hmm. Well, thanks, Sarah, for your insights. This was a really cool conversation. And now I just want to continue it for a few more moments with some pre-submitted questions from our audience. Let me go those really quickly. So the first one that was submitted was, are there other companies in the media and entertainment space that you or I believe could be vulnerable to an activist investor?
Oh, that's a very good question. Well, one of the weird things is that right now, so much of our coverage is focused on a lot of these private companies that are looking to either sell or go public or find some way to liquidate. They can't really do it right now because the markets are so bad. But of the public companies that we talked about that we didn't mention, or the public media companies that we didn't mention, some of the local media companies have had a lot of stress on them. It's not exactly activist investors, but it's a lot of private equity putting pressure on them. The classic example was Lee Enterprises, the local newspaper company, having Alden put pressure on them and forcing them to make changes. Ultimately, Alden's takeover bid for Lee didn't work, but I would expect similar things to come for the big newspaper chains like Gannett. Other activist plays that I don't think are going to go away. We know and we reported that News Corp is talking to CoStar, a real estate company, about a $3 billion plus deal to spin out its real estate arm. I think that transaction likely goes through, but if it doesn't, there's still going to be activists and pressure on them to find value in that stock. I mean, Tim, you've been covering this for a long time. News Corp trades at like half the value of the New York Times, but there's no real reason that it should be other than the fact that its subscription business is just a little bit different, more towards data services and less towards news. So I think you're going to continue to see activist investors there. And then the last piece might be some of the other big entertainment companies. Right now, I don't know that an activist would know what to tell Sherry Redstone with Paramount, or would know what to say right now to David Zaslav at Warner Media, or Discovery Warner Brothers, as it's been renamed, because those companies they know are looking to have some sort of mergers in the next year. Now, an activist investor could come in and say, look, now's the time to move. Now's the time to make a strategic play to position yourself well. Or maybe because that's how they're going to plot some sort of takeover with private equity, et cetera. But those are the other big enough publicly traded media companies that I would think some sort of activist would start to put pressure on them in the near future.
Yeah, and Paramount's always an interesting one because, I think ever since Sherry brought back Viacom and CBS together, that was almost everybody's immediate question was, okay, is she positioning them for a sale? Because they're still not big enough. Now they're Paramount Global, and it's just, this week alone, they are fully merging, Showtime and Paramount Plus operations. That probably streamlines them even more so. So I think I could see an activist investor coming on and be like, okay, you keep taking these little moves. Now it's time that's like, do it or don't kind of thing.
Yeah.
Okay, so the next question, and I'm going to answer this one really quickly because we have talked about it a little bit. It deals with Hulu. It's do you think Disney will roll out a fast option, possibly via Hulu? Is this my source that wrote this question? I'm not sure. Which started off as a free service, if everyone remembers, and then was the addition was, will Netflix and Warner Brothers Discovery also? So my answer to that quickly is yes. I don't know if it'll be Hulu or not, but I do think everyone's going to have a fast service. I think it makes too much sense not to. I think Pluto TV, I think, is one of the smartest acquisitions that we've seen in media in the last few years. I think Paramount's done really well with them. And in terms of Netflix, I mean, Ted Sarandos on their earnings call recently, he said it's something that they're looking at. David Zaslav, he's basically said that it's something that they are planning to do. So I think you're going to see every major media company that is in the streaming game, even ones that are only slightly, like Fox, for example, they have Tubi. I think that's something everyone's going to have is just part of their streaming sort of portfolio.
I agree with that, Tim. I think at this day and age, you can't rely just on the subscription streaming services. There's too much saturation. And even though the ad market's down, there's a ton of room to grow in streaming advertising.
Well, yeah, I mean, especially with advertising, I can't tell you how many advertisers complain about the rates they have to pay for broadcast TV when outside of the NFL, I mean, you see these primetime ratings and everything's in the one. And I remember when I first started this job 11 years ago, if something was a 2.5, we would call that a dead show walking. And now NBC would do backflips if they got that rating.
Yep. Efficiency matters.
All right. Well, thanks, Sarah, again for joining. This was a really fun conversation. Thanks to everyone for watching. Your questions were great, and this was really fun.
Thank you, Tim. Good to talk.
Thank you all again for joining this afternoon for another virtual conversation that has made everyone smarter faster. To keep up with this year's forecast and trends in media deals, or to subscribe to Axios Pro, visit axios.com/pro. Take advantage of Axios Pro's 2023 kickoff sale. So you'll use the code PRO2023 to get $200 off your subscription. And you want to subscribe today because that offer is going to end pretty soon. Once again, thank everybody for joining, and we really hope to see you soon on AxiosPro.com.